if I'm going to sell my business, right, they're going to want historical financials.
Yep.
What does that preparation of those historical financials look like? What are people asking for?
They're asking for those financial statements that I was saying earlier, right? They want to see your balance sheet, your income statement, your statement of cash flows for the past 2 to 3 years, right? And it's not only people that are buying businesses, but if you're going to the bank for lending, they want to see that as well, right? And those things are going to tell them, like whenever we look at the financials, we can see, okay, here's how CurlMix was doing 2 years ago. Here's where CurlMix is now. You know, here's the ebbs and flows of the business and everything that's been going on the past few years.
What's up, you guys? Welcome back to the More Rounds podcast. I'm your host, Kim Lewis, CEO and co-founder of CurlMix. And today, you guys, we have my very own accounting agency here with us. And I am ecstatic because I've been working with them for years and I love them. They have been through the trenches with me and also celebrated with me when we went to zero and then we got those multi-million-dollar checks. And so I'm super excited to have them here on the podcast today. Ephraim, who's the face, and his amazing team. But before we get started, I want to do a cheers. Okay. Cheers.
Cheers.
This is good.
Yeah, I love it.
So Ephraim, can you tell people about yourself, accounting background, how you guys started with EFS? And EFS is the accounting agency, and just more about you.
Yeah, so before I started EFS, I was in corporate America. I was working for a big accounting firm, and I was there for a couple of years. And then 2007, 2008, 2009, it was a rough time in the economy, right? And a lot of companies were laying people off, and I was one of the people that got laid off during that time. And I was looking for work for like 6 months. Couldn't find anything on the market.
It sounds crazy because I feel like accountants can always find jobs.
My recruiter at the time told me, I don't think you're going to be able to find anything for the next 18 months. Wow. And in my head, I was like, whatever. Like, I'm coming from a big accounting firm, right? So there's no way that that's going to happen. Yeah. And it was happening, right? And then one day I just woke up and I told Rita, my wife, who was my girlfriend at the time, I'm done. I'm not looking for any more jobs. I'm going to start a business. And we weren't married yet, right? So you could tell, like, that was like, is this going to prolong us getting married or whatnot? So,
so how much do I love this man?
Right. But I made that decision. You know, I was like, it's time for me to just, you know, strike out and do my own thing. So I started a tax company at the time, you know, and for the first few years, it wasn't successful. Then after a while, we started, you know, marketing more and we got more clients. Then I started getting a lot of clients who were saying, hey, we like what you're doing, but we need more. We're small businesses. Is there anything more that you can provide? So then we started working with people more so outside of tax. We started doing bookkeeping. We started meeting with them on a regular basis to, you know, help them with their cash flow and managing their money. And I mean, it's grown since then. I think now we're at about 100 and something clients that we work with on a regular basis.
And do you have clients in a certain sector? Like, do you focus on, you know, brick and mortar? Do you focus on, like, what most of your clients are in? What industry?
Yeah, we have the two niches that we have, which is kind of interesting, are e-commerce and childcare.
Oh, really?
Yeah.
Oh, that's funny.
Yeah.
Okay.
Yeah.
You know, most people I meet who are starting businesses think that they don't need accounting right away. They're just kind of like, it's something I'll get later. And, you know, truth be told, I felt that way too. I didn't have good accounting until I didn't have you. Okay, we had some level of accounting, but I didn't even invest in accounting, period. Not even before you guys, until we were at $1 million in revenue. So is that like too late or too early, or when should you be investing in accounting?
I think you should at minimum have at least a bookkeeper, right? Or some kind of bookkeeping service. And you could even sign up on your own and kind of, you know, use QuickBooks or Xero and kind of do it yourself and set it up. But having that at minimum, I think, is so important because you need to understand what's going on each month, you know, with your numbers. There's a lot of times that we make decisions without looking at the numbers. And when we do that, we don't necessarily know, like, if the decision is the right decision to make, right? So I've seen situations where people have bought too much inventory, right? Or they bought too little. They had opportunities to where they probably could have hired some people to really accelerate the growth that they were experiencing, but they chose not to because they weren't really familiar with the data. So at least I would say some kind of bookkeeping service. You know, it could be one of these $200, $300 type services, but start out with that at least.
Oh wait, you can spend as little as a couple $100s on bookkeeping. Mm-hmm. How do I find this person? Am I just looking on QuickBooks certified consultants or something? Like, where am I going?
So, Google.
Okay, but that's hiring another job. Like, what do you mean?
Right. So Google, but then, we also have a sector that we, charge that much, and we do bookkeeping for like smaller companies as well.
I didn't know that.
Yeah.
Okay. So I need bookkeeping out the gate. I can't wait till I'm like $50K in annual revenue, $100K.
Yeah. I would say wait till you're around that 50, $60K mark.
Okay.
You can manage everything in a spreadsheet, or like I said earlier, if you want to sign up for a software, Xero is my preference that I use. You can they charge what, like $20, $30 a month. You can use that, and then you can kind of do everything yourself. And then you can also do a consultation with an accountant, right? So they can kind of show you how to set things up, how to really reconcile things. And then once you grow to a point where it's too much for you because you're trying to focus on growing the business, then you can bring in a bookkeeper.
So what are the levels? There's a bookkeeper, there's a CPA.
So there's bookkeepers, right? And then you have accountants. And some accountants can do bookkeeping and accounting, right? So when we look at accounting is more, bookkeeping is we're reconciling all the transactions that you have each month.
Now, right? I know what that means, but for someone listening, reconciling means?
We're putting things in the right categories,
gotcha.
Right? So let's say you go to buy gas or you go to buy supplies, we're putting it in those categories, right? And
as marketing or operational expenses or cost of goods sold or whatever.
Exactly.
Gotcha. Okay, so we got bookkeeping is categorizing everything.
Accounting
is?
Accountants can analyze what has been categorized, right? So when bookkeepers categorize everything, they give you financial statements, right? Such as like a profit and loss statement, which is an income statement, a balance sheet, and a statement of cash flows.
Yeah.
But a lot of bookkeepers may not know how to analyze what's going on those statements. So accountants, a lot of them have the ability to come in and say, based upon what I see on the financial statements, this is what's happening in your business.
Okay, like a tarot card reading. I can see your future. It's calling me now.
Exactly.
No, that's terrible. I'm sorry. What was her name? Do you remember her name?
Miss Cleo.
Miss Cleo. I'm like, not Cleo, but Miss Cleo. Okay, so accountants are Miss Cleo, and then you have your CPAs.
Yeah, CPAs are an extension of accounting, and they also focus on tax preparation and things like that.
Gotcha. And then you have your CFOs.
CFOs, yes. So CFOs have the ability to, help you with budgets, forecasting. What I like to say is accountants focus on what historically happened, and then CFOs focus on the future, where you're trying to go, right? So if you have revenue goals, CFOs can put together plans, right? Financial plans. Gotcha. They're going to ask you the questions like, if you're trying to hit $10 million this next year, how many employees do you need? How much marketing budget do you need? Gotcha. Things like that.
So now this is from the perspective of launching my own agency, right? I'm pretending that I want to have my own agency one day. And I think I have always just assumed that agencies are profitable out the gate because they get booked for the service and they go employ the team to build the service, and then whatever is left over is profit. Is that how most agencies start, or no? Is there something that I'm missing when it comes to funding an agency? Like, what are some potential gaps in funding that have happened maybe in the early days of EFS?
Yeah, you kind of really don't need much funding, to be honest.
Okay.
All you really have to do is talk about your business, right? Like, there's such a demand for what we do. There's so many small businesses, but there's not enough accountants.
Gotcha.
Right? So literally, if you just go on your Facebook or your social media and you say, hey, I'm starting this business and I'm doing this, and let's just say you wanted to focus on taxes and that's it. You could make a lot of money in that because all you need is the software, and you don't even need like paper or anything like that because you can do everything virtually in the cloud, right? So you might need a few softwares here and there outside the tax software, but essentially, you charge your fee and then you get paid, and then you can scale that by yourself to, let's say, 70, 80,000, and then you can start to bring in people. So it's all about how you manage the money, I would say. But I don't necessarily think you need money in the beginning if you're doing what we're doing.
For many of you who don't know, I'm Kim, CEO and co-founder of CurlMix, where we help you master your curls in 21 days. CurlMix is what makes this podcast possible, and it helps you get the best wash and go ever. So if you like my hair when you're watching the show, that is what got it here. We are now available in Ulta, you guys. Yes, it is our first retailer ever, and it's doing amazing. And I would love your support if you would go out to Ulta and try CurlMix. All right, you guys, now back to the episode. So how do you scale an agency then? Or do you need money to scale it or no?
I would say potentially yes, right? Because let's say you want to start hiring more top tier talent or whatnot, right? The Micahs, the Ritas, right?
He's talking about people on his staff, the people who I talk to all the time.
Right. They're not cheap.
No. I mean, I
but
pay
they're worth every
right?
dollar, right?
Okay.
Yeah.
I know I'm a bit of a headache. Okay. I know y'all spend a lot of time with me. Okay, I get it. Jeez.
You're actually one of our best clients.
What does it take to be the best? Paying on time. That's all I do. Sorry, y'all. They are not trying to hear us. Okay. I done lost my train of thought.
No, you were talking about do you need money to scale?
Yeah.
Business,
right? To buy top tier talent. Okay, that's cool.
Top tier talent, because I think that one of the issues one of the things that we don't do as agency owners is focus on bringing in top tier talent that are on our level or higher.
Yeah.
Right. We focus on bringing in employees, but if you have other people in the think tank with you, you can go further a lot quicker.
So can we talk about exiting an agency? I have heard of, I know the multiples in the CPG industry. I know that if you're selling a CPG company, if you're not the number one or two, it's typically based on profit. So it's based on EBITDA, earnings before income tax, depreciation assets, right? But if you're number one or two in your industry, meaning like top selling, you're more than 30 million, you'll get anywhere from a 4 to 7x multiple on revenue. What is it like in the agency realm? You're making money on day one, you're profitable. What do the multiples look like? And like, how is that determined? Do you know?
Yeah. I've seen 3x is the common one, and I've seen 4x, and I've also seen 2x.
Okay.
I think it's going to really boil down to, can the person that's buying the business come in and like replace you without you having to like continue on? Or if you continue on, you're continuing on for, let's say, 6 months to a year, right?
Yeah.
But if it's all based around you, and I'm coming in and I'm buying your agency, but I'm seeing that you have your hands all in it and you can't really exit without the client saying, you know what, I need Ephraim, then your multiple is going to be a lot lower. So the systems and processes really are a big deal.
Is there a way for me to tell the multiple for an agency by just looking at the P&L? What are the percentages that you need to have for a P&L to be sold as an agency?
Yeah, I would say percentages for agencies, normally 30 to 40%.
Oh, those are much higher than product companies.
Definitely higher, because when you're looking at like the employee capacity, right? Employees, if you can really make everything efficient, they can do a lot more of the work, and you're selling labor essentially. You're not selling product. And
so you're saying it's a 3x multiple on profit or 3x multiple on revenue?
3x multiple on revenue.
Ooh, interesting.
Yeah.
Huh. And then of course you just have to get into the industry where there's already demand. Like you're in an industry where it's accounting, but you might be in a professional services company where you have to create demand and provide the product. I imagine they have some smaller margins.
Yeah, for sure. I would say, those definitely have smaller margins.
Can you give me an example of an agency that would have to create the demand as well as fulfill the service? Or do you know any offhand?
When you say create the demand, meaning
like I got to go and like drum up. So, for example, everybody needs accounting, right? So maybe an agency that everybody doesn't need. It's like a nice to have. You know what I'm saying? I don't want to say novelty, but you know what I'm saying?
Yeah.
Like, for example, I would imagine an app agency.
Yeah.
An agency that builds apps might be novel,
Yeah.
I don't know. What's another agency that could be novel? Those are just thoughts.
Yeah, definitely app agency. I don't want to put human resources down or whatnot, right? But
okay.
A lot of times people look at human resources as optional, and it's really not once you grow to a certain level, right? But obviously marketing, things like marketing, accounting, the demand is a lot higher.
Yeah.
Right. So app agencies, and I would say HR.
Gotcha. Oh, that was a good one. Okay. When it comes to accounting, how do you know when it's time for me to go from a bookkeeper to an accountant to someone who's a CPA to needing a CFO? Are there revenue levels that let me know that, or like what are those things?
Yeah, that's a great question. I think it really depends on several things, right? It depends on your cash flow, your reserves, right? Sometimes, a lot of times when we start businesses, we started with $0, So if you started it with actually some savings or some money coming in, you could accelerate that and say, you know what, I can go hire that accountant that I've been eyeing or whatnot. But I would say around 60, 70,000 bookkeeper makes sense.
Okay.
$250,000 to $500,000, $250K to $500K, an accountant now makes sense. And then I would say seven figures, 1.5, 2 million CFOs now makes sense bringing them in.
Should I hire these people directly into my company or should I use an agency?
It's interesting. I had this conversation with the client recently. And she was saying that, you know what, I like your service, but I feel like I can hire one person to do it all. I was like, oh, really?
Like, do that then, come back then. Let me see what you think.
So I was like, you can hire one person that can do your payroll, they can do your accounts payable, right? They can do your bookkeeping, they can do your budgeting, your forecasting, your sales tax in e-commerce. Right, your tax preparation.
He's looking at me like that because I get a nice chunk of cash taken from my account every quarter from Avalera.
Oh my gosh.
Oh my! I'd be like, what happened? Oh,
yeah,
taxes.
Tax preparation, tax planning. Just everything that we do that we have different departments for.
Yeah,
it'll be a lot for one person to handle.
Yeah,
no matter how great they are. Because if you're a CEO you're wanting things done timely.
Yeah,
one person is going to be a lot for them to handle all that.
Do you have a story of maybe somebody who did that and then what they came back to you saying and like how you guys kind of rescued them?
I have a story, yes. So I have two actually, but I'll give you one.
Okay.
Actually, here's the one I'll give you, right? There was one person that used to work for us and they said that, hey, I'm leaving to go work for someone else, right? And I'm going to go in there and I'm going to be the CFO. And I was like, you know what? I think it's a decent opportunity, but be careful because they might want you to do the whole spectrum of finance and accounting, because
and this person maybe was a CPA, but they wanted them to do the CFO means forecasting. It also means bookkeeping. It also means analyzing the accounting. It also means tax and all the things. Okay, yeah. Go ahead.
So this person went in there thinking that, okay, I'm hired for this one role. And then when they got in there, they were told, hey, we need you to do all these different services.
And then low key, they probably had different entities too. So they were like, oh, we selling merch over here. We doing, property rentals over here. We doing such and such. Yes. And it's like, those are 4 different CFOs for 4 different types of businesses.
I think they had about 10 to 15 different entities or whatnot.
Oh my God.
Yeah.
No, ma'am. No, ma'am.
Yeah.
And they probably didn't even tell you that. You didn't even. And you know what's so crazy? As an entrepreneur, you're so focused on making money, right? I used to say, I need to focus on making money, not accounting for it.
Right.
But you don't realize that it's not just. I was talking to a friend, and I'm sorry to aside. This is your interview, but I don't want to bulldoze you. I was talking to a friend. She's making tens of millions of dollars in stores. Her brand does incredibly well. The retailer wants her to do other brands in other sectors, right? So like, say for example, if I'm in cereal, I'm doing so well, they're like, hey, we also want you to make something in chips too, under a different brand, Wow. And it's like, okay, that's cool, but that's a totally different business and it should probably be in a different entity. And then when you have your accountant professionals doing accounting in those different entities, what kind of problems can you run into where it's like, I've got 4 entities and I'm using one agency to manage all those things?
That's a great question. There's a lot of problems. So when you say one agency to manage 4 entities, they are all separate entities, not underneath the same entity.
So in my mind, if it's going to be a different category, like for example, I'm in curly hair and I want to launch a wine, right? That's not going to be under the same company. I wouldn't call it Chromix. It's to be a separate entity.
Exactly.
And so people will launch products in different, sectors with different names, not realize, and it could just be subsidiaries. They could just be all little pockets of brands under the same umbrella. But oftentimes it makes more sense for them to actually be separate entities, correct? But then I know that provides its own different accounting challenges. Right. And I know that because we have Chromix and 4C only, and then we have our manufacturing, but like there are challenges when it comes to the P&L when we're trying to read all that data. Can you talk about the challenge of having all those multiple entities on one set of books?
Oh, yeah,
and the
for
point
sure.
of, splitting them out?
That's what I thought you were asking. So accountants, this is how things should be, right?
Yes. Oh, I know. Rita, your wife, she'd be like, no, Kim, we can't do that. I feel like we'd be on the call and she'd just be telling me, no, we can't, no. Okay. Half of it is like me getting my own collegiate education on finances, but go ahead.
Right. So we like things structured a certain way, right? So whenever there's so many instances where I've seen situations where someone might come in and they'll say, you know what, I'm a marketing company. 6 months later, I'm going to start a credit repair business. Right.
I'm sorry, I didn't mean to laugh. You're for real. Okay.
No, I'm serious. I'm very serious.
Okay.
Right.
Y'all watch out now. Okay.
And they're doing it underneath the same LLC, right? And it's like, separate that, especially because we work with a lot of people that are influential, I guess, in the social media space. So whatever they sell, whatever they put out there is going to take off immediately. So we're like, separate these things, right? Because there's different things that can happen. If they're all underneath the same entity, legalities, right? Let's say something happens in one business and you get sued. Now it's affecting the whole entity versus that separate entity. And then also, how are we really going to help you to do the accounting better? It's for it to be more detailed and you to see, okay, this is how much your marketing business is bringing in and spending and profitable. This is how much your credit repair business is bringing in and profitable. And then this is how much your hair care business, like all these things just being put underneath the same entity. It just, for accountants, it makes our head spin, right? So it's all about, and I know a lot of times people are like, I don't want to do that because it's more paperwork or it's more things that I have to track. Get that to your accountant. Your accountant will handle all that for you and they'll make sure that all that is together.
I think people aren't thinking about the acquisition. Mm-hmm. If they thought about the acquisition, then you'd be like, okay, this has to be separate.
That's another, man, you said it, right? That's another thing, right? Let's say you have your marketing business and then you do the credit repair. Your credit repair takes off and you get tired of it and you want to sell it. How are you going to really separate that? It needs to be a separate entity. So now you can sell that. You can continue on with the marketing business.
Watching on YouTube, unfortunately, is not enough. If you've learned anything from my podcast, please, please, please leave me a review on Spotify or Apple Podcasts. I would be so appreciative and you would help further the progress of this podcast. Now back to the episode. And I don't know if you're familiar with this, Ephraim. I just had a question about this, but if I'm going to sell my business, right, they're going to want historical financials.
Yep.
What does that preparation of those historical financials look like? What are people asking for?
They're asking for those financial statements that I was saying earlier, right? They want to see your balance sheet, your income statement, your statement of cash flows for the past 2 to 3 years, right? And it's not only people that are buying businesses, but if you're going to the bank for lending, they want to see that as well. Right. And those things are going to tell them, like, whenever we look at the financials, we can see, okay, here's how CurlMix was doing 2 years ago. Here's where CurlMix is now. Here's the ebbs and flows of the business and everything that's been going on the past few years.
Have you ever had a client who failed an audit?
When you say an audit, because there's IRS audits, there's...
Oh, I didn't know about those. Yeah. Okay. You tell me. You can't say that? Okay, never mind. Sorry.
I can dive into that.
Okay, yeah.
Years ago, probably about 10 years ago, when I was new to the industry, when I was kind of new and I didn't necessarily know what I was doing, that much, we had a client that failed an audit or whatnot. And I remember telling this client, because they came to me during tax season, and I did their taxes. I was like, hey, you have a business, we need bookkeeping. They gave me a spreadsheet, right?
Okay.
I think at the time they were making like 50, 60,000. Right. The next year they came back with the same spreadsheet, but this time it was 10x that 60,000.
Okay.
Yeah. So the business grew 10x. Right. And I'm like, we need bookkeeping. Like, we can't, like, this is going to be a problem. Right. So I do the return. The person's like, hey, is there anything else we can do? Right. Can we, I have expenses from here. I have expenses from there. And I'm just taking their word for it and putting it into the tax return. A year later, audit. Right. So now we're like, oh crap, we're about to go through this audit process or whatnot. So we go through the audit process and I learned a lot, right? I learned things like charitable contributions. The person had charitable contributions, but the way it was titled, right? It wasn't titled in the business's name. It was in the personal name. So they didn't count that. They said, we need to move that to the personal return, right? Travel. Oh, you paid for travel, but it wasn't anybody that was employees, right? It was, let's say, a family member, right? So we can't count that, right? So I learned from that, and I said from then on, we're never doing another tax return again without proper financials and bookkeeping. So clients hate that, right? The ones that come in because they're like, I got to pay all this money to, prepare my taxes. Well, yeah, you do, because we're not going to go through an audit again. And we've only gone through 2 audits since, and it was last year, and we beat them both because we had the documentation. We had everything together, right? So that's one of the biggest things that I want people to take from this, is that having your documentation and your paperwork together, you can beat just about any audit, IRS-wise.
That's so good. So nobody was a criminal like Al Capone or anything, and like just stealing an audit because they're just fraudulent, right. Not that. Okay, yeah. Okay, good to know.
But you were talking about another audit, though, I'm assuming.
Well, I just know that we've had to go through a couple with you guys, and mostly because it was voluntary, right? Like I was deciding to crowdfund, and because I'm going to raise $5 million, the SEC requires an actual audit that I go through, and over the last 2 year financials, and they have to be in GAAP. Right. And so, I was terrified to even, do that, and because we manufacture and we have the e-com in 2 brands, and so I was just worried about it. But you guys have like successfully gotten us through it, so I'm super grateful, and it's taught me so much. I feel like I've learned so much from you guys on all the levels: the bookkeeping, the accounting, the CPA, the fractional CFO services. And I feel like I low-key got a finance degree in addition to paying for those services. And so but I also raise capital, right? So, I can afford these services, and I show up every week on my Wednesday calls, 30 minutes, sometimes an hour, depending if it has to go over. And I'm like, where are other people going to learn this stuff from? Right. How can people get the information they need if they're not, yet paying a 5-figure, bill monthly?
That's a great question. Because like you said, like it can be pricey. And if you don't
rightfully so. Capital, like you guys are doing 6 or 7 different things that you're touching every week, like taxes, sales tax, and you're calling Delaware if I need to. You're making sure I'm paying taxes in every state, managing my P&L and every week. Like and then when we have an audit, I'm not getting charged in addition for that audit. So like, I know it's worth it, but I also know that I'm spending a pretty penny to do that. And I would have never known this had I not been able to. So I'm just wondering where people should go outside of college, right? to learn finances.
Yeah. Excuse me. There's a lot of information on YouTube, surprisingly. Okay. So I would start there. And there's books that can be read as well, like CFO books and just finance books. And then, I do post a lot of things here and there on my social media for people to like get some more information on. Okay. But I would say really like digging deeper and finding some books and things around that to really read up on can help.
Do you have any favorite books that you recommend?
I forget the name of this one. I read it a long time ago, but it's like a CFO toolkit.
Okay.
And I'll get that for you so that you can share it with the viewers.
But that's good. Even like a CFO toolkit. I almost bought a financial engineering textbook.
Financial engineering.
Just so because when I learned that, of course you want your books to be accurate and truthful, but when I learned that you can do some financial engineering from a fractional CFO, and I was like, oh, I didn't know that was a thing. But people design their books to look the way they need them to look for their kind of business. For example, I know somebody was building a furniture business where they would get the money for the furniture but not deliver it for a whole year. So, then you're
like pre-order.
Yes. Okay. So your books are going to look different than a product business like mine where they're getting the product within 5 to 7 business days. Like, and so that's when financial engineering would come into play. And I didn't know that. So I was learning so much. I almost bought a textbook to get that.
I'll also say, if you're working with someone right now, like an accountant, like really push them. And when I say push them, meaning, talk to them and ask them certain questions or just pick their brain and really figure out if they can do more for you. Because a lot of times accountants may just do what they're contracted to do, right? But then if
How do you push your accountant?
Well, I would say, so there's a lot of people that we work with or that whenever they were working with someone else, they would say things like, I don't really meet with my accountant, right? And they might think that that's like something that you don't necessarily need to do, right? But meeting with your accountant, as you know, you get to have these conversations, right? You get to talk more about your finances, your numbers. So now, on these meetings, when you meet with your accountant, they should be bringing your financials to the call. And y'all should be talking about those numbers. Y'all should be talking about trends. Ask them things like, what do you see in my business that I could potentially change that could help me accelerate the growth of the business?
Yeah.
What are some areas in the business that, you feel that I could cut back on and become more profitable in? What are my unit economics? Things like that.
Even we're laughing because we have a manufacturing facility.
Inside,
Yes, it's an inside joke. And we had to go and calculate COGS for all multiple hundreds of SKUs that we have at Chromix. And so we had to literally figure out, okay, this product has an ounce of oil that costs 30 cents. This product had a packaging label that cost 20 cents. And so just getting to that level of granularity was actually insane. Okay, so we only got a few minutes left. I want to go over our lightning round.
Okay.
What's a book that you think every entrepreneur should read?
That's a great question. I would say great CEOs are lazy.
Ooh.
Yeah.
Well, now I have to know why. What was that book about?
It's similar to E-Myth, but it's all about really like, hey, you as a CEO, you need to be more lazy, which means you need to empower your team. You need to lean on them more and have them, help you out more. Empower them to do more for you.
Gotcha. Most money you ever lost on a deal?
Most money I've ever lost in a deal. I would say, and I've seen your previous episodes or whatnot, right? So it's not 3.5 million or anything like that.
I couldn't even laugh when she said that. I was like, I'm sorry, G. That's a lot of money to be losing.
I would say about 50,000.
Okay. Yeah. Can you say what it was on?
It was on a client that it just didn't work out, and we just refunded them their money.
Ooh, they was that bad? You was like, just take your money back.
It didn't work out.
Oh,
and that's the thing. Like, I'm learning that we're not for everybody, right? Like, everyone's not going to come in and be a curl mix type of client, right? You're going to have some clients that you may not.
What's
just
the curl mix type of client?
Clients that show up, that have energy, that really enjoy, the meetings and everything that we do for them, and see the value in what we do.
That's true. I could totally see how if I had not raised any money at all, and if I just was like, I still want to count my money, right? That's that. At the end of the day, that's the game. But I could totally see being absent if you feel like you don't need it. If you don't understand the value of it. But those people typically don't have enterprising minds either. They don't have big visions for the future.
Right.
What is a myth that you've believed about entrepreneurship that you no longer believe that is not, it was easy?
That it's going to sound kind of crazy, but that getting to $1 million in sales is impossible.
You thought it was impossible?
Maybe not impossible, but just like, if it was to happen for me, it would be when I'm old and gray.
Oh.
And because when you're not there, you see, it looks like something that is going to be so far out and, and hard to touch or whatnot. But then when you really sit down and you calculate the numbers, you say, okay, this is how much product I need to sell to get there, or how much services I need to provide recurring.
Yeah. You
break it down to those, minute numbers, and it's like, oh, okay, then I have a plan, and I know this is what I need to go out there and do.
Gotcha. Ephraim, thank you so much for coming on the pod. Where can everyone find you on social?
Yes, so I'm on Instagram at Ephraim CPA, and on LinkedIn, Facebook as well, and EFS Group PLLC. Can I link them to my podcast as well?
Oh, sure. Just pod shout out.
Pod shout out, 8-Figure Focus as well.
Yes. I got to, do you shoot in Texas?
I do.
You in Houston? Yeah, maybe I'll fly to Houston.
Come on.
All right. Yeah, I'll do 1 for 1. I'll fly out to Houston.
All right.
Well, that's a wrap on this episode of The More Rounds. Thank you guys so much for watching. And please comment, like, and subscribe. When you subscribe, it really helps us make more episodes and deliver better quality to you guys. Thank you so much.